Hello everyone, welcome to another episode of FM Station. Today we'll be talking about our flagship fund, Mirae Asset Large and Midcap Fund, formerly known as Mirae Asset Emerging Blue Chip Fund. With effect from 1st of August 2024, different suspensions on the subscription of this fund were withdrawn. To know more on this, you can refer to our website. So to understand more on this and the fund, we have with us Mr. Ankit Jain.
Thanks.
He's a co-fund manager for Mirae Asset Large and Midcap Fund. Apart from Mirae Asset Large and Midcap Fund, he also manages Mirae Asset Multicap Fund, Mirae Asset Midcap Fund, and Mirae Asset Great Consumer Fund. So welcome Ankit. Mirae Asset Large and Midcap Fund has an AUM of close to rupees 40,000 crores. So do you see any challenges in terms of managing the fund, particularly from a fund size perspective?
Thank you, Shrenik. So if we look into the surge in Indian equities reflect clearly the resilience and potential of the country's economy. With the strengthening macro environment, we have seen or in fact witnessed significant growth in the capital markets. There has been significant increase in the investment opportunities in terms of number of stocks, particularly in the mid cap and small cap space over past 5 years through newer listing, and also profit pools are growing up significantly, and which is also reflected into the increase in market capitalization of these companies. There has also been significant increase in the market depth and liquidity over the years. Just to share, let's say some numbers, aggregate market cap of Nifty Midcap 150 indices has increased more than 2 times to almost now 82 lakh crore. And this is between, let's say, November 2020 when we stopped, when we put restriction onto the SIP limits to now, let's say, till June 2024. Midcap Universe has also become more sort of a diverse with almost 15 new companies that were sort of listed during this time frame across different sectors like financials, fintechs, e-commerce, discretionary, chemicals, logistics, healthcare, real estate, retail, capital goods, a plethora of sectors as such over the past few years. Aggregate profit pool also, if we look into for this indices has grown almost 140% during the same time frame, November 20 to June 2024, and now profit pool is almost 2 lakh crore plus. And lastly, if you look into the funds, market cap construct of minimum 35% in both large and mid cap gives us enough confidence to manage incremental flows rise in fund size without impacting the overall portfolio liquidity.
Thanks, Ankit. So while the fund has to maintain a minimum of 35% each in large and mid cap, how do you manage or decide on the remaining market cap allocation within the fund?
So if we look into the fund investment approach is about bottom-up stock selection while seeking risk-adjusted return across market caps, right? The fund has mandate to invest minimum 35% each in large and mid cap across all point in time. At current valuation, we do find large cap relatively more attractive than mid and small cap. Hence, current portfolio tilt, if you look into, is more towards large cap with almost 51% allocation. 36% allocation is to the mid cap, and while 13% allocation is almost to the small cap.
Thanks, Ankit. So how have been the earnings so far across sectors as well as across market capitalization? So if I can share some light there.
So we look into first, let's say fiscal year 24 earnings growth has been very broad-based with very strong earnings growth of, let's say, around 22% in case of Nifty 50 large cap, 30% plus in case of mid cap 150, and small cap also has been around 20%. Clearly, if we look into continued strong momentum in financials, increased profits in telecom, and earnings upgrades across pharma and auto has aided to this particular profitability. This has also resulted in substantial valuation re-rating, particularly for the mid-cap segment of the market, which is now trading at a 50% premium to historical average, and also there has been almost 45% premium to that of large cap. So at this juncture, we do see more value in case of large cap segment.
Sure, Ankit. So what is the current positioning of the fund while you talked about the earnings and valuations, and in that context, if you can elaborate more on which are the sectors you are being overweight and which are the sectors you are being underweight within the fund?
Yeah, so if we look into, we continue to remain positive on consumer discretionary, healthcare, and financials. In addition, if we look into, we are overweight in basically real estate, logistics, as well as the telecom sector. We are underweight on utilities and capital goods because we believe that valuations are quite expensive out there. The fund does maintain reasonable sort of a risk, reasonable overweight and underweight position. At an stock specific level, but at a sector level, generally try to make a good balance out there to build a diversified portfolio. The alpha generation is primarily sought through the active stock selection.
Thanks, Ankit. So, how should one approach investing into this fund? If you can just elaborate more on that.
Sure. So, if we look into, the fund maintains a meaningful exposure to both large and mid-cap stocks. So, the fund is positioned to provide a pretty good fine balance through stability from the large caps and maybe incremental delta growth from the mid-cap allocation. Therefore, investors who have the risk appetite to invest in equities and who want adequate exposure to both large and mid-cap stocks through a single portfolio can consider investing in this fund with a time horizon of 3 to 5 years, at least.
Thank you, Ankit. It was really an insightful session, and I hope our viewers would have benefited from this. Looking forward to more such insightful sessions in future.
Thanks, Shani.
Thank you.
Thanks.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.